Hey, VV Nation, what's going on? Steve Chappell here from VectorVest. It's my first appearance on YouTube, so I'm pretty excited about that. I'm glad all of you folks are here with us today. If you want, just go ahead and chat in where you're tuning in from. So where are you watching us from today? It's always fun to kind of break the ice with something like that. Obviously, Glenn is not here. I'm here in his stead, and we'll be taking good care of you folks today. We're going to have a special presentation in mind, and in that regard, and we're going to cover a very cool informational tool we have in VectorVest called the Derby, and show you kind of the ins and outs of that, why we built it, and what it helps you accomplish as an investor or a trader. All right, we got Clarkston, Michigan, looks like, Wiscasset, Maine, my goodness, Falls, Ontario, Boston, Massachusetts, Florida. No cowboy hat today, Paul. I'm sorry to disappoint. You've obviously seen my Facebook page, or I guess the VectorVest Facebook page even. Let's see, Florida, Ottawa, Palm Springs, one of my favorite places that I've been. Boy, Palm Springs is great. All right, very good, very good. Good to see all of you folks here today. So yeah, let's kind of get to it. And I think what we'll do at this point is take a look at where the markets are, and then branch into the tool and look at what we can do to use that tool to try to take advantage of the current situation. So what you can see hopefully on your screens right now is just a kind of a sneak peek at our market timing information, where you've got all the major indices there at the top. I guess I can try to point. Oh, you got to point this way. So you got the Dow up only 170 at this point. It was up over 400 earlier in the session, obviously. NASDAQ's come back in too at 166. VectorVest Composite is showing a little less than 0.5%, almost just 0.4% at this point. So we started to see some pretty good signs this morning that the market's trying to find some footing. And as the sessions wore on, and potentially more and more folks come on CNBC and other places touting how much trouble we might be in with the banking situation, the markets have tapered off quite a bit. We can see the change that's had in the color guard. For my Jockey Club members, we're going to be talking about the Jockey Club here in a bit. They saw this morning that we had a green light in the price column, and so far I'm not sure we're going to be able to close with one based on what we see at this stage. So we'll keep monitoring that, but it's good to see that the indicators are at least trying to get up off of the mat, if you will. So without further ado, I think what we're going to do is just break over into this tool. Let me talk about the spirit of the tool, why we created it, and what it can do for you. So it's going to look a little foreign at first. It can be somewhat overwhelming. You're like, well, oh my gosh, what's all this stuff? It doesn't look like stochastics or Fibonacci's or anything I've seen before, right? So first things first, what is it? Why is it? And how to use it, right? So this is a tool that we built to address the single most asked question that Dr. DeLito or I ever received anywhere at any place around the world. The question was always, my goodness, VectorVest is this massive product and it's got so many opportunities in it. What is the number one thing for me to look at? What's the best strategy? They kind of come up to you and try to pull you over into a corner. And you don't have to tell everybody, just tell me though, what's the very best thing that I can do in VectorVest to make money? And so it's a little bit of a loaded question, quite honestly, because there's lots of great opportunities in VectorVest. Anybody that's been with VectorVest a long time, I think, understands that. But there typically are a handful of strategies that tend to perform better than others most of the time. But the real way to answer that question is looking at what is happening right now. And so this tool is built to take all the different searches and scans that we have in VectorVest and rank them. It's a lot like running a race, which after all is why we call it the Derby. It's built in the spirit of a horse race, where the stocks that are exploding today are contained within these strategies, these green bars. And as they continue to shoot up the page, the bars go to the right, and the strategy that's got the best performance of the stocks that are inside works its way all the way up to the lead runner. And so if I click on a strategy, say downhill racers, a couple things you notice right out of the gate though, before you even do. One is this is a bearish strategy. So, anything that you find in here would be opportunities to sell short, for example. And in the kind of market that we may we find ourselves in predominantly for the last year and a half. May even see further potential downside in the future, as most folks are of the opinion that we're heading at least into a mild recession, right? There could be some great opportunity on that side of the market. And what it's saying today is, hey, look at me, and what's in here are going to be potential short sales that you can do on these companies. And so when you dial it open, you can also then look for, hey, which ones are kind of out in front, leading the way. And lo and behold, anybody familiar with PacWest and what that company is and what they do? Right. So regional banks continue to see some pretty significant pressure. And so we can see which ones we want to pinpoint. We could take the whole basket. That's often been a pretty good solution as well. And you can see that throughout the day out here on the right, you've got this kind of spark chart. And what you'll see is these positions have continued to make more and more money throughout the session today. And the ones that are leading the charge, obviously, are leading that curve up the page. So what we can do then is kind of highlight a few of them that we like, or highlight the whole list, whatever the case may be. And as you do that, then you can just graph them up. You can right click, look at the graphs. And when we do in the Jockey Club, let me broach that subject while I just mention it again. So this whole system that we're talking about right now is part of a trading room environment that we've also created where we leverage this tool. Okay. And so it's a trading community of certain VectorVest folks, a lot of them, who get together every single morning. We get together starting at 9 a.m. as, about a half hour before the markets open up. That way we can get prepared, for the current session, for the current trading day. And then we continue to monitor this tool and look for trading opportunities after the market opens up. So we meet from 9 a.m. to 10:30 every single day, every single market day, every single day the market's open. And, coach people through using the tool. And a lot of people have a lot of fun. I'm sure there's, I'm not looking at the chat just yet, but I'm sure there's lots of folks in the chat from the Jockey Club, and they'll probably be chiming in a little bit as we go. But when we look at this chart, we see a dire situation where the banks came way down, tried to get a little bit of lift up the page, and now over the last couple of sessions are continuing to re-seek out maybe even those lows until there's more clarity. So on the banking front, I think there's some information that comes out. If I heard CNBC right, there's some information coming out even tomorrow, I believe, on the deposit situation. But they also said at the same time, you're not going to get very much clarity from that report, and it's going to really be into the kickoff of the next earnings season, before we really start to see maybe the information that everybody is going to be clamoring for. So, I would expect that the banks, probably the worst is over here for the moment, until maybe another shoe drops that's unexpected that we don't know about. But I would want to certainly get the next earnings season behind me before I would think about investing in these stocks. Can we trade them? Can we play the ebbs and flows? We absolutely can. Just looking at this chart, though, it's a bit of a mess. That's what would be considered support right now. Maybe, halfway off the current range or so, kind of middling in between support and resistance, really. So not really a great opportunity, honestly, unless you want to try to get in there and scalp something. So that's what we do, is kind of coach through what stocks are at the top, thereby what strategies are at the top, and then looking at the individual positions, what looks like good setups. And we've got it down to a pretty good science. So the next thing that we see, though, is cryptocurrencies. And two of the better trades, I'll take some questions here in a sec. I don't want to, I'm not used to being in YouTube, so bear with me a little bit. But gold and blockchain trades are two of the better trades we've got going on right now. We bought JNUG a few days ago, which is the junior miners, which should outperform gold, unless the wheels totally come off the stock market, because they are companies after all as well. But most folks would tell you they often lead the charge. We also Glenn bought Hive, I think even last week, which is HIVE, which is another, which is one of the blockchain stocks that you can pick from. Riot and Mara, so RIOT or MARA are often two of the more popular choices in that on that arena. But we bought Hive. The chart looked a little better at the time and has done pretty well. I'll show you those graphs here quick so you can see them. And then I'll look at the chat and see if I can't maybe answer a first question. All right, let's see. We'll put JNUG and Hive.
Hey, chap, open that graph control panel up a little bit wider so they can see the volume.
Graph control panel.
Yeah, you see where, where
this
RT and everything. Yep, just like that. Yep, just a little bit more so they can see it. Yep, perfect.
All right, thank you, buddy. All right, see, so technical problems. Expect more. I've got all this fun stuff. I feel like Kramer. I've got these buttons that make all these funny images and noises. This is great. All right, so here's JNUG. We've been in it for a little while now, though. And you can see it's on a nice little upward ascent right now. I'm going to go ahead and put a trend line across the bottom for you, just as a quick measurement of, do I still like being in this particular position for the short term? And honestly, we might even like it for the longer term. So maybe more on that later. But you've got a nice little trend line here that it's working up. Okay. And then Hive, going to be a similar story, almost same shape, because these are, so I want to put to bed something kind of right up front. The popular, even if you Google it, I think the popular or conventional wisdom is that gold is an inflation hedge. I have not really found the correlation between that to be nearly as significant as sort of just a flight to safety in general. And more, I think, strongly tied to the dollar, quite honestly, although the correlation there is even tricky to pick out at times. But, these types of things, both your blockchains and your JNUGs, your gold type positions are going to thrive typically when uncertainties of the future become more and more dramatic. So the more and more dramatic they become, the higher and higher these prices of these other types of assets should climb. And so that's what we're seeing on these charts. So if I go to the next one, here's Hive. And I think we've got about an equivalent gain in both. So even though this one isn't climbing up the page quite as quickly, Glenn got in a few days before me because he was in the trading room several days prior to me, and got a good running start here. Other choices in that space, I think the most popular and honestly the one that checks out the best in VectorVest is this one called Riot. Okay. And so we'll put that one up here as well. And you can see that one's actually lifted off pretty good. And that makes sense to me because if we do something like this, let me show you this really quick. See, I'm going to get to the chat. I promise I'm getting to the chat at some point. I will get there. But I've always just got so much that I want to show and help people with. And so it just becomes this snowball. Okay. So anyway, I think I picked it up from Dr. Delito. You just start going and it just keeps leading you places where you want to go next. So anyway, what I'm going to do is go to viewers. Over here, I'm going to go to watch list viewer. And when I do that, we can create a new watch list if we have to. No, I've got one. Good. So we'll go to one of mine for the Jockey Club, actually. And what we can do is we can put those stocks in here. Okay. So we can put Riot into this list. And we can put Hive into this list. And when we do that, then we can compare them. And we can compare them in terms of VectorVest metrics. Quite honestly, Hive is a fairly good pick here because the upside potential, realizing, there's not a lot of earnings on Bitcoins over the last year or so. Certainly they suffered quite a bit. So you're not dealing with fundamental decisions here. You're dealing with that fear factor that we were talking about earlier. So it's almost indecipherable. Riot still does have a little better numbers overall, in combination RV and RS, and certainly has a better RT and better CI and better VST and kind of everything across the page. is a little bit better. I think the one thing that probably pushed Glenn over the edge, as I'm just looking at all this data in aggregate, is at least this company is already begun to make a little bit of money again on a forecasted earnings growth rate of 12. So they don't make nearly as well. Even as I say that, Riot, the EPS has come in negative here recently. So yeah, I mean, Hive makes a little bit more sense in that they're riding the ship right now a little quicker than Riot has. Now, Riot has been the stalwart, so I would expect they at some point begin to catch back up. And that's why, again, you're seeing a lot of buying today, even on Riot. So long story short, Riot is typically the better choice. It typically moves faster, further, and for longer than all of its peers. Mara would be a second close choice. But Hive has been doing really well here very recently. And that makes sense, you know, picking the position from that standpoint. All right, just looking at a couple things here. Mining for crypto is getting expensive for Mara and Riot. There you go, Maria. Well said. It certainly is. It certainly is. So that's a very good thing to bring up to the group, and really why, you know, it's beginning to hit the bottom line in a bigger way, right? Nicely done. All right, cool. We got that done, Joey. Joey should be so proud. I figured that out. All right, cool. Let's keep rolling. So let's go back. There he is. Everybody's got to have a sidekick. So yeah, we, you know, they got the really cool ones on those late night talk shows on TV. I can't remember the fella's name. He's got that boned robot or whatever. Anyway, all right. So in terms of what to look for today, you know, there's kind of been a changing of the guard, honestly, as we've gone throughout the day. So we can tell what's happening at the top of the list right now. You've got kind of a mix, but if you've been monitoring this throughout the day, more and more bearish strategies are actually percolating rather towards the top of the list here. And again, that's going to indicate kind of that change in sentiment throughout the session. So the Derby picks up on that pretty quickly. Over here on the left, I'm going to click on this box right here. It says Derby Timing Indicator, DTI. This is an intraday timing model. And so when we pull this sucker up, it's going to come across down here at the bottom. And, you know, as the markets were climbing here, we like taking positions long, you know, when this green line is above 1.2 and continuing to rise. And so that kind of hit muster right out of the gate today, to be quite honest. What we don't like doing is taking positions later in a day when this starts coming off of its high watermarks. And when it does, it's also kind of a cautionary tone, if you will, on positions that you've already traded. So from a global macro view of the stock market is losing steam. So too then likely your positions will begin to suffer just because of, you know, the market suffering as a whole. So honestly, there was some pretty good warning signs here, you know, to kind of come off the gas, particularly if you're doing intraday trading, is what I'm talking about right now. You know, in terms of swing trading, you know, you don't want to get tied too heavily into this, more so than just making sure you're trying to buy when markets are following through and on the rise. So this is what I'm talking about here. Before that is, you know, intraday, if you're going to do intraday trading, which you certainly can do. And as they start to converge and the red line comes up off the lows here, you can then begin to switch gears and say, all right, well, you know, as this thing climbs up and starts to get above 1.2, which is kind of where we are now, we can think about short side opportunities for the remainder of the session, you know, should that stay in tune. And so this is pretty beneficial. You know, if we just kind of walk back through time here, you can see the green line when it's above 1.2 and holding or rising, markets tend to go up. When it comes below 1 and is falling, you know, markets are on the decline. And so it'll help you position yourself throughout the day in terms of do I want to really think about buying stocks right now? If the green line is above 1.2 and rising, you can think about it. And at almost any time throughout this chart, that was a good decision, right? Until we get over here to the right edge. So there's going to be a first opportunity in any given week, and kind of the last opportunity in any given week. And sometimes, you get on the last side of things. That just happens. That's reality. It's trading. There's not anything that's right all of the time. Has anybody ever found anything that's right all of the time dealing with the financial markets? You never will. It just doesn't exist. What this tool does is it puts the laws of probability on your side in a significant way, so that if you do it day after day after day, week after week after week, month after month after month, you're going to have a lot more winning days than losing days, is where you end up. Okay. All right. So with that, let's see if there's any other questions out here as we're going through it. But that's what this tool does. Okay. There's lots of different things that we can get into here. I'm going to keep things high level for now. If there's questions that lead me into some of the deeper aspects of the tool, I will get there. But literally what we like to do is just parse through these top strategies. Here's cryptocurrency stocks, for example, and some of the better opportunities today. Well, we said Riot, right? And then Hive is in here. Oops, control, Chapel. And both of those are two of the better ones. Cypher, not as familiar with these guys. Let's see what the chart looks like on CIFR. So we'll be looking at this for the first time together. So this one kind of broke out of what was resistance, is now retesting support. And you've got kind of this harami type pattern there. You can't really call this a harami. I don't expect anybody in the room to necessarily know why. But harami is a reversal pattern. And so in order to have a bullish harami, which is what these two bars represent, you need downward price action to indicate that a reversal may be coming. What we have is upward price action. Now, the change in sentiment is still all the same. So what we had was overwhelming pressure by the bears yesterday, right? So we had a market that went down in a pretty big way, closed a lot lower than it opened. So we have this red filled bar. The next day, today, the market opened higher than it closed yesterday. So change in sentiment in this market, this CIFR market, if you will, began at the open and is carried out throughout the session. Now it's off the highs, so the change in sentiment has tapered a bit. But if we stay inside of yesterday's open, you have an inside day, or in this case, a bullish harami type configuration, where bad day yesterday, market opened higher than it closed. We opened higher today than yesterday's close, but are closing lower than yesterday's open. So that's a lot of words. But since you're getting a sneak peek at this, I want you to understand the depth of the knowledge of the coaches that you're going to have at your disposal for these hour-and-a-half sessions every single day. I'm also going to show you how you can get involved in that for as little as $29 for a month if you're a VectorVest subscriber. Okay. And so we're talking about an hour and a half of coaching every single market day for $29 for an entire month, right? And a lot of people, hopefully in the room, that are Jockey Club members will certainly indicate that that is worth your while to consider. In fact, it's an absolute steal. I can assure you that VectorVest does not pay me $29 a month, for example. Or anywhere close. So anyway, that's that. Volume's coming out of here a little bit, so things look content to kind of sit and rest on support here for a moment. This is normal. Anytime you break through a resistance level, you often get what's called in the technical analysis community a retest. So we've just kind of retested here, are sitting here, and hopefully the next thing to follow will be a move up and out. So how do we gauge that? Well, if let's say the market closed, the way it is right now, what you would do is you would take the higher of the two. You'd take this close or the midpoint of this red candle, and you'd go maybe 12 cents above that, well, this is a $2 stock. So you go maybe 4 cents above that, 3 cents, there's 12 cents is way too much slippage on a trade of a stock that's $2. But, a couple pennies above the higher of those two prices so that when you trigger in that the change in sentiment, the real market direction of this equity is continuing to move in your expected direction for your trade, right? So order entry is the first form of risk management that almost nobody accounts for whatever reason, while it's probably the most important, because what I would do is put out a buy stop order for 224 or better, right? So it's called buy stop, put it out with the broker. And if this thing opens over 224 tomorrow, it'll get put out a market order to fill that trade, okay? But the 224 is the floor for that trade. So it can't put out a market order that executes less than that, to my knowledge. That may vary by brokerage, I don't know. But I've never had that situation happen. You can attach a limit to that. I generally don't do that as much anymore. I used to be fearful of getting like crazy fills, like stocks that gap up 50% only to come back 25 before they go up again. If you do, you just want it to be kind of loose. Something like this, you might do 25 cents. Yeah, I want to get filled for less than 250 for sure, because that's where we stopped going up last time, But buy stop order is really, the main ingredient there. All right, let me look at some of the questions. Is the Jockey Club included in the 30-day trial? The answer to that question is yes. So you get full access to that for the $29. Joey, you might want to, you already did put the link out in the chat. Great. So that link Joey put out there, the one that says VectorVest and website, vectorvest.com/thrive, that'll take you to a web page where you can view this. Let me see if I can bring that over. Wow, Joey's really impressed now. It's like, I thought I was going to have to help him on that one for sure. So here's what it looks like.
You don't need me here anymore. Yeah, I'm not needed.
I love it.
I got to find program. There it is. All right, I got it. I got this, Joey. I got the whole ship. All right, so $29 for the 30 days. Look, I'm not going to detail all this stuff. Basically, what you're going to get is you're going to get the platform that the Derby is housed in. That's VectorVest, right? That's the most important ingredient. That's going to give you all of your market timing that we're going to utilize. Inside of that, you're going to get the Derby application. And on top of that, you're going to get all of those Derby sessions. So you're going to get emails that will invite you to the room with your own special login. So you can't share them. It's one user license. You get in there, and every single morning, if you love trading, you want to get in the Jockey Club. There's just no two ways about it. And boy, some of the people, I've heard a lot of great things from some of our folks that have been in there for a long time. So for those of you that don't know, we've been running this for 7 years now. And for some reason, it's largely been a secret. Well, that's not going to be the case anymore. So we're hopeful that more and more folks will get involved. And the other thing that I would say about the Jockey Club that's not obvious at all is that, for example, we had some folks in there.
Clear that chat.
Oh, clear the chat. See, I need you, buddy. So,
Barely.
yeah.
Maybe Nation would have got you.
Yeah, they would have. We've been looking and trading at this one the last couple of days. Now, it's not finishing well today. I think the market's continuing to soften up, isn't it? So probably looking to maybe even start locking down profits on some of these trades that have been going well. But this was given by a subscriber in the room, and boy, I gave her an A+ because it really does embody the kinds of stocks that I like to trade. I like to catch them on these pullbacks, when at all possible. And a good gauge for that. Has anybody ever heard of Linda Bradford Ratchke? Well, if you haven't, you ought to. That's on stop price. I need to get a moving average here, so give me a second. She is one of the best traders ever in the history of the stock market. She's a legend, okay? And she has a setup called the Holy Grail. And I'm not going to give away the entire setup, But one of the main components is just this 20 period average. And I use that a lot because I can tell if a stock is walking up the page or not, you know? So I'm giving away most of the ingredient. But whenever a price comes down here and starts to kiss these averages on these good stocks that have good earnings, okay? So if I put earnings down on the bottom, okay, that's the engine that drives the bus. This is the engine that drives the bus. This is the engine that pushes stocks higher and higher in good market conditions, right? So no matter how good earnings are, if the stock market is collapsing, you know, the stocks are going to collapse with it. I hope we all understand that, or are beginning to, on the back of this last year and a half. But when markets bottom and start rising and continue to rise, that's your main ingredient to keep pushing the stock prices up the page, is this earnings down here at the bottom, okay? And then what I like to do is find stocks that are on trend, that pull back. When we start kissing this average, I start looking for executions. And execution is, hey, I got a hammer here and we went higher. This is the perfect time to get in. If we come back here, this day would have been a good day to get back in there, because you're moving back, you're pivoting up and out, and you're getting back above the moving average, right? And those are look back here. We can go look at as much data as you want. This is why you don't try to rush too quickly, right? We never really broke above that 20 average, right? And you'll find that on a lot of the more heavily trafficked stocks in particular, you know, like an Apple or a Netflix or whatever, it tends to work pretty well on just about everything. And so with Apple here recently, is that intraday or end of day here? Yeah, end of day. Apple's been a little bit of a mess. It's gotten a lot of good press lately. Goldman Sachs putting a $199 price target on this sucker, which I have a little issue with because VectorVest isn't picking that up yet. I mean, earnings here, they're talking about how earnings are going to amplify in the future. I liken that to, hey, we got all this gold in the ground, and if we don't break 7 drills, you know, trying to go down there and extract it out, you're going to be a gazillionaire. I'll believe it when I see it, okay, basically. But a good time to started thinking about buying Apple again off of all of these little bobbles here was when it was getting back above that 20. You know, even if you bought the initial burst here, which would have looked a lot better middle of that day, you know, there wasn't a lot of pullback before it heated back up. So it's generally a really good time to start looking, and a good time to be fearful, you know, when prices are staying reluctant to get above it at all. Every once in a while, you know, you're going to be more on a break even, slight gain, slight loss from time to time when stocks go through chop. Moving averages are not built to deal with that. That's why traders like Linda Bradford-Ratchke use other things on top of this method. So she wouldn't trade this at all, okay? And that's because you're not on trend. This is emerging trend here. You have higher lows and now higher high. So you're on trend here. So you're looking to use this kind of thing now, but you're not looking to use it when you're not on trend, okay? So she has an indicator that she likes to use to ascertain trend. It's called ADX, A-directional index, okay? So some of you have probably heard of that. All right, Perry, my favorite long-term accumulation. Is that right, Enzo? All right, that's awesome. Yeah, I tell you, I really like the look of that graph. I don't like the stock market right now. You know, but I really liked, that's the picture perfect kind of company and thereby graph that I traditionally buy myself. And just as I laid it out there, so yeah, it's good. I concur. Not that that matters so much, but it's always good when we agree, right? Real time includes Jockey Club. Yes, real time does include the Jockey Club. So we covered that. Holy Grail. I cannot read this, but I'm going to say yes. I don't know. I can't read that, unfortunately. All right, Steve, I got to go. All right, see you, Nectarius. Nectarius is one that's in our group. All right, let's see. I'll make sure I didn't miss anything super important. All right, the market timing is at support right now. This morning, it looked like it was a blast-off day. Can you take a look at that now? So we talked about that in our trading room this morning. So this is Michael. Michael, we talked about this in our trading room, and I'll go ahead and clear the question, but we didn't think it was, which is why we played things a little bit safe today. And even that may not be turning out to be quite as safe as I would have hoped. But this tool actually helps with that a great deal, because I don't know how in depth I want to show this, but it's long been a VectorVest recipe that on a blast off day, the bottom fishing searches are the ones that are at the top of this list, and they're exploding. That never happened at all today, and really has been a fail point ever since we've kind of come down and kissed those lows. So this tool would have said no, today wasn't a blast off day, because the bottom fishing scans just weren't here. There was one, it was Pirates Long, and it had the banks in there. And so we said, no way, Jose, not doing that. And so what we want to see is like the top 10, you should have 7, 8 bottom fishers up there. Top 5 should be all bottom fishers. And it just wasn't the case. But what you're talking about is still valid and still may come into play. So again, we'll go through kind of depth of knowledge, show you how much we talk about these things. What we're seeing probably jives a lot with what you're seeing, but maybe a point here in the near future, all hope is lost. We'll see, which creates opportunity to the downside. So all hope is not lost. It also creates better opportunity for better prices and exuberant upside potential at some point in the future, right? But what he's talking about is, if I go to a market timing graph and just kind of look at the lay of the land on the stock market right now, it's worth talking about, because there's a lot of great stuff to convey here. So you have this market that's come down, 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 right? So the market peaked, back here, early November 2021, has largely been on the slide. We've actually bottom fished several times, 5 times to be exact, and come out with profit 4 of those times on these sharp bounces. Okay. We don't even have the stocks today like we had then on the way down. So to us, that it just wasn't. Now, what he's referencing is the stock market has come back down and kind of hit this interim low off the October rally. And this is a very critical level for a lot of reasons. One, it is just simply support. Pretty weak support, as it's not like a 6 or 5 or really even more than maybe a 3 touch line, I guess, at the most. I guess you could construe 4. All right, so it's got some merit that way. But what might be even more interesting to some this pattern that's taking shape here is known as, it's a type of head and shoulders. We'll start there. There's a head and 2 shoulders. This guy happens to be standing on his head. It's called an inverse head and shoulders. It's like he's doing a handstand. What it indicates, though, is you've got downtrend that's culminated at an absolute low that's led to uptrend. And what that does, you have a left shoulder, which is the low before the ultimate low, right? Which is the head. And then you have a right shoulder, which is the higher low off of the ultimate low. And so it's this massive change in sentiment in the stock market. And the first thing to know is that this took a while to develop. So the expectation is bullish, but it's a while out into the future. Now, if you Google this, you can get this kind of information on Google. We happen to just know it, but this level of the right shoulder on those patterns, whether it's head and shoulders or inverse, that is your fail point. So if the stock market closes below that level, I guarantee you are not the only one noticing that, not just because it's a simple support level, but that it has even broader, very significant ramifications at this stage. It would mean that the global turnaround that everybody was expecting with the soft landing, rots a ruck. By the way, lots of you folks haven't heard this yet. I liken the soft landing to a Sasquatch, okay? A lot of people think they've seen one, but they don't really exist. So, it never gets old. Now, look, there has been one soft landing ever. That was by Mr. Magoo, otherwise known as Alan Greenspan, back in the 90s. Okay, that's one in the entire history of the stock market. And that one is even arguable because later there was a pretty significant collapse. Okay, so they just don't happen, long story short. But we'll see. Maybe there's a second time for everything over 70 years, right? We'll see. You got to go back. Maybe there was one back in the ticker tape somewhere that there's just no record of. I don't know. But Federal Reserve, I don't believe, was around then. So anyway, that's how important this level is, though. You know, CNBC, they have their chart guy, right? The master chart guy or whatever. I can't ever remember his name in particular, but he's always looking at these kinds of patterns on even individual securities. You better believe he's looking at these, and all the major institutions, you know, and everybody's looking at these kind of patterns as kind of a last line in the sand before things could get pretty bad again. Okay. So you want to stay elevated of this low if you want to stay bullish on this market. If you fall below, I would say not only are you likely going to head towards the lows of October, you know, you could, depending on the news that continues to come in, to fall well below that. The final thing I would say here is this pattern did trigger. That lends itself to about a $67 price target on our VectorVest composite, which is a significant move because that's measured from the tip of the head to the intersection of the line between the interim highs. Okay. So generally you're targeting, you know, up in this area, which is around about $67, if memory serves correctly, should this pattern hold. So if we get a soft landing, and the jury is still out, I'll quickly cover that. Just one thing leads to another with me. You know, it's, I'm going to give you the best guidance I can all session long, for as long as I can anyway. So we monitor the investment climate too. Okay. And I keep people abreast of this even in the trading room. So we've been talking about that level for the last, well, we were kind of targeting it as support when we came off of the recent high. Okay. As that's probably where we're going to land until more is known. Here's the interesting thing. We're in a climate chart now. So this is your 30,000 foot view. Okay. And what you have on the top is S&P 500 earnings. We said earlier that earnings are the engine that drives markets higher, right? Well, when did they plateau? They plateaued on a 50-day average basis back in early 2022, right? And have gone flat to down since. So we're not in a situation where earnings are really getting crushed yet, you know, but we are in a situation where just here over the last week or so, we're seeing the drop beginning to develop like we haven't seen for a little while. And what that ultimately will do then, as far as VectorVest is concerned, is push us into what we call a bear market scenario, which, believe it or not, we're not there yet. It's true that maybe the bear market has already begun, right? But when you've got stocks, okay, like Apple trading $57 over its value, when you've got stocks like Tesla trading probably $100 over its value, when you've got mom and pop shops trading 45 PE multiples, you know, and you hit a soft economic backdrop, what do you think comes next? So, you know, I'm not here to scare the pants off everyone, but everybody needs a little dose of reality every now and then, because if the shoe drops here and the Fed does more than overstep its bounds and really crushes corporate earnings, you could, the worst, believe me, the worst of it is not over. The worst of it is yet to come. Okay. So how do we take advantage of that? We take advantage of that by buying inverse funds, by using stock options to buy puts, you know, to make money when markets are falling. We look at short positions vis-a-vis the Derby. So that can be your catalyst as to, so if I go to bearish strategies, okay, that can be the catalyst to what stocks do I want to pick to buy puts on, or because we don't want to buy them on Tesla. We don't want to buy them on Microsoft. I mean, who wants to buy a put option on a company where the guy can get on Twitter and say, I've just made the greatest new invention known to man, and the SEC doesn't care, right? So I would never, nobody should ever short Tesla. If anything, that's the one that you don't want to do that on, so what you do is you go after the really bad stocks, okay? The stocks that don't have any value at all. They're not just trading 2 times value, they're trading on no value at all, typically, okay? And so, that would be kind of your low-hanging fruit, is these stocks in these top bearish strategies. Worst performers over 10 was like strategy of the year last year. I think Todd Schaefer did that special presentation, right? So if we look in here and we look at the top ones, again, sorry for not minding the chat as much. I'm not used to it like Glenn. I promise I'll look again. Some of you are probably thinking, well, it can't get any worse. Well, earnings isn't getting any better. So yeah, I mean, it can get worse. I think there's going to be better candidates as we go through. Here's one where the stock's going down and they're losing more and more and more and more money. So this is a much better candidate than the first one. Beam, okay, Biomed Genetic. Got to have your head on a swivel with biomeds. Just make sure, there's no FDA announcements looming. A lot of times you can get that just on the corporate website, or there's websites out there that can give you that kind of information. But I don't go short a biotech unless I'm plugged into, is there a phase 2, phase 1, God forbid, phase 3 clinical trial coming, and I'm going to be short that equity? And not so fast, right? But there's general stocks in here like this one. This is just personal consumer products, and there's nothing to like here. Earnings are getting worse and worse and worse. Okay, you go to the next one. This is Kala. That one's not as bad, right? Earnings have improved significantly. They still are really terrible, but this is far worse. So maybe even one of the better ones yet. What did the EPS go to? It went from minus 50 cents to almost 2 in just the last quarter. Yeah, so that's high on your list for, making money should the markets go down. Twist Biosciences. This one, they're so bad. They're losing $4 a share, traded at 15. Put a PE ratio on that. You can't. The denominator is negative. Not that PE ratio is all that helpful anyway. But you got to know where earnings are going, guys. This bottom graph right here, this EPS. All right, so what we do at VectorVest, we don't just take what the company's face value earnings is per quarter and plot it on a chart. That's not what we do. What we do is we look at about 12 years of data, okay? And we look at the consensus analyst estimates, so of which there's thousands. There's thousands of analysts that tracks the stock market. And so a stock like Apple, all 5,000 of them, or however many there are, track Apple, and so you're getting a consensus number on all of them, right? So we take the coming year and the following year, and the 12-year trail, and we combine all of that into a 1-year lead. I'm not going to give you the math, otherwise you'll go out there and create VectorVest, okay? but what we do is that, and that's just one little thing here, and it's not even the most important of what we do, but it certainly relates to being the most important, as earnings drives the bus, right? That's going to parlay into a lot of other numbers that we do, like relative value, relative safety, and so on, that are far more important and measure that to some degree, right? So earnings is the engine, though. I mean, that's the main thing. That's the main takeaway. And the engine is not only off, like it's on fire. So stock price should not only go down, it should go down like it's on fire. And that's what it's starting to do, right? So that's what this tool, Wayfair, look at Wayfair, right? Everybody's thinking, people that don't have VectorVest, they're thinking, this is the lows. This is the lows. We got a 1, 2, 3, 4, 5 touch line. Good luck with that. I'll bet you a box of donuts right now that I'm going to be comfortable here. By August, it's well below that line. Okay. Why? They are absolutely seething money. It's like they're setting it on fire in the backyard. That's what's happening there. All right, let's go to the next one. Yeah. So hopefully you get the idea. It's like shooting fish in a barrel. Okay. If you get market direction right, those are the kinds of stocks that you sell short because they're burning money in the backyard. That's what they like to do. So that's not what Tesla does, right? That's not what Microsoft does. That's not what Adobe does. It's not what Nvidia does, right? Those are the stocks that do the best job of collecting the gold bullion and putting it in the backyard. There's a difference, big difference. All right, see if we got a couple more questions. True, most of VV offerings. True of most of VV offerings. My first class was the options jump starter. It paid for itself before the class was over. Yeah, so that's what I typically, Roger, that's good insight there. And that's what I typically tell people about the trial for the Derby. And in some cases, it's probably true. But if it can't pay for itself in that trial period, so even just the first 30 days, like if it can't pay for itself or you don't see that it should have paid for itself, because sometimes we get in our own way, right? Even us, we get in our own way sometimes. It's true. Nobody doesn't get in their own way. Even Linda Bradford Bratschke, everybody gets in their own way at some point. Right. So, but you'll know in 30 days, essentially, whether or not it's going to be worth your time to continue. And that's what we tell folks. Absolutely. And so for less than $1 a day, you can figure that out. Let's see, not ship, but close. That was probably in relation to another question or comment earlier. Hello, Steve. When you get a chance, would you please look at LABD? Yes, these are some good options. Hey, Ravi, what's up, man? Ravi's in the Jockey Club, I think. Pretty sure. Yeah, I remember you from yesterday, actually. Cool. All right, let's see. And you were looking at LABD yesterday, yeah? LABD, SQQQ. All right, and DRV. So we got some real estate, which is DRV. We've got SQQQ, which is the NASDAQ essentially, and we've got LABD, which is biotechs. Now, what these are like mutual funds, okay? And what the fund is doing, what the fund manager is doing is it's using a lot of derivatives to create leverage on being short those equities. And they rebalance them several times throughout the day. But what it does is when the stocks that this fund is essentially shorting through the use of those derivatives, quite often, they gain points. And what the fund manager does is decide this fund is going to be 1 time, which is just 1-to-1 correlation, or 2 time, which is 2-to-1 correlation, or 3 time in the case of these 3. So Ravi likes to kick things up a notch for sure. I do too, which is fine. So if you're right on market direction for the biotechs being down, you're actually going to get 3 times the reward for buying this long. So you don't have to short anything yourself. The fund manager does all of that for you and is also, in this case, providing the 300% leverage. Okay, so you're either going to be really right or you're going to be really wrong. And I remember telling Ravi it looked like the chart was holding well on LABD 2 days ago, because I'm guessing he had asked somebody else about it prior, because there were these lines drawn here. And while I don't necessarily agree with those lines, it's all saying the same thing. I've been trained by, people who write for Stocks and Commodities magazine and such. Okay, I often only draw consolidation patterns when I can find decipherable pivots. There's a correlation here to that, in that this is price congestion. Okay, and what Ravi was noticing, I think, was this thing setting up and getting ready to leg up higher because, price entering this congestion was higher. And this is actually a pennant.
You gotta clear that chat, buddy.
Oh, clear the chat. This is actually a pennant here. So this is that price congestion and that kind of that triangle look, right? So you have kind of this pole and you've got this pennant out here to the right. All that represents is what I said, congestion. Often price will depart in the same direction it entered this pattern, okay? And so what Ravi acutely probably jumped on is price exiting that pattern, right? And is continuing to move that way. Generally, your initial target is kind of the height of the pattern as it develops. So if Ravi is super up to speed on this whole technique in totality, he's probably sitting on less of a position now right, Robbie? He's probably not. But, you know, it's got room to run because it can, in theory, run as much as the amount of price run coming into this pattern. Okay. That's kind of your maximum potential, if you will, based on just this pattern alone. Now, more patterns might happen as we go and you can, you know, adjust things, but that's what is coming into view now. Okay. And so depending on how quick a trader Ravi is, you know, that would have been a really good start to a trade here, because now you're riding on a balance of a trade that's already profitable, and thereby, you know, it's much more difficult for you to become unprofitable. If you've already taken some of the position size down, just let the balance run, you know, until we see something change our opinion. So long story short, this is a good opportunity here. It's still potentially quite early. The easy money has come and gone, but the balance being able to run would indicate there's likely further run to come, right? So that's a good pick there. If we look at the next one, this is the SQQQ. Now this one looks like it's just coming into a new low, but it is at a level of support. I'll be, you know, if I split the difference on these two lows here, though, that's kind of where the price congestion really is, and that kind of runs you up against that one too. So these are areas, not explicit lines. I think that's the first bit of knowledge that a lot of folks need to have that don't, and that is support and resistance are zones, not lines. Anyway, so it's down in that zone. So this one is I need more data. I need another day. I like the fact that prices are opening and closing on the top side of the range. I like the fact that bulls tried to take this lower, because remember, this is inverse. It takes some time to get your head around it. I know. But what this is, the SQQQ is betting that the NASDAQ is going to go lower. Now, the NASDAQ has been the most resilient part of this market. The flight to safety seems to have even gone towards tech, which is baffling, because higher interest rate environments are not good for tech, okay? But at the same time, your big behemoths these days are what? They're tech. They're Apple, they're Google, they're NVIDIA, you know? And so the flight to safety has even gone into this space. So normally tech kind of leads the downward decline along with small caps, as people are fearful of growth type oriented businesses that need that growth to survive in many cases, right? But what's happened is they've become the safer haven with some of the big boys. So this one's not getting up off the mat. In other words, tech is not being sold off as aggressively as other market segments right now. I would much rather be in LABD for the moment. But when this one comes to the party, and it will at some point, you know, then we'll jump on this train as it does that. So it's kind of setting up at support. What we need is at least one up day here, just to get us moving, pivoting up and out of this zone, right? But that one could be good in the days to come. DRV, it's on its way. This is beautiful. This is exactly what Steve likes, you know. Here again, is at the 20 average. So it doesn't often pull back all the way. But on any of these little retreats, I've offered up pretty good opportunities. And yeah, you know, the real estate has also surprisingly been resilient, hasn't it? That's also a bit baffling to some degree. But the wheels have obviously begun to come off here. And DRV, I think this is a great pick. Again, Ravi. So I really liked the LABD yesterday. It even looked actionable. I think it was yesterday. I really like this one today. And I think we got to wait and see on the SQQQ, you know, and I'm not giving advice, guys. I'm reading charts. So everything I'm saying now is what the charts say. So don't construe that as financial advice. But I can tell you what the charts say and how to read them, you know, and how to interpret them. And that's what we do. You're also, this is perfect, right? So this is exactly what we talked about earlier. This is a stock given by somebody in the room who I've never met in person, okay? But is a member of our club. But we hadn't talked about any of this stuff. And so he's going to be saying, yeah, wow, cool. So we have a stock that broke out, right? Potentially. See, we talked about retesting earlier. Notice how prices today came back, retested that area, right? And so that retest so far has passed muster. And yeah, I think that this is likely headed higher. Very likely headed higher, and even very likely as early as tomorrow. Yep. The retest is already behind you, hopefully. It could retest again. That does happen. A lot of people only buy the retest, incidentally. Then they set a tight stop underneath that zone by about a quarter or something, and try to get off to a good start here, realizing you could have another retest and you don't want to blow up a stop loss or something, right? But this, so hopefully I'm not overstepping my bounds here. Hopefully everybody's able to follow along. I'm kind of in trader mode. So anyway, trying to be as helpful as I can. All right, cool. I don't work for VectorVest, just a longtime user. It's 100% honest company to work this. Hey, what's up, Cody? How's it going, man? All right, let's see. Ah, cool. Robert also said you'll make that $29 back in about 15 minutes your first day. That was your experience anyways, right, Robert? Right, Robert? That's cool. All right, let's see here. I'm not gonna put that one. That's fun though. That's a fun one though, John. I'm not gonna put that one on the screen, but that one about the TV personality is pretty funny. Let's see. I think Glenn is watching but not saying anything. He's gonna see these comments. Steve in the sideshow with Joey. All right, cool. So not a lot. Can you look at TRMD? They're supposed to go ex-dividend tomorrow. I like this stock long-term. Your thoughts? Yeah, so I think the macroeconomic situation has become a little bit unclear. This is, by the way, a stock that you will find even in my own strategy that I wrote for VectorVest. So I better like it. Because my search, I'll show you. If we go to Unisearch, oops. If I go to Unisearch and go to Chapel's Champs, I put this strategy in VectorVest, I don't know, 15 years ago. It is one of the more reliable searches in the program, has always been. It picks on the top 100 stocks by our analysis, which is top VST, value, safety, timing. They've got some decent liquidity. Most of these have a lot of liquidity. They're at least $10, and they're sorted by stocks that have overall good fundamentals that are technically charging up the page with good earnings growth. Okay. So the earnings growth is often an engine to support a good future yield, right, on those dividends. So by that analysis alone, you're in pretty good water here. But to go back directly to the question, you're more concerned about, I think, price action than the quality and longevity of the dividend. And I think that's justified, but let me just double check. Yeah, so the earnings growth here is 46% a year. Well, it's petroleum, right? Those guys are printing more money than they could have ever possibly imagined. More on that on a diatribe on some other channel. Not related to VectorVest. So yeah, I don't see a dividend on these guys. I don't see a dividend on these guys, though. I don't know. Maybe we're missing something there. But just looking at the long-term viability of this thing, I think over the short term there could be a little bit of pain here. It's looking like a double top to me. Okay, and often what's going to happen here is you're at least going to come down and test support. So the critical line is the one that I drew across support. And it's critical from two perspectives. One, it gives you an idea on where prices should hopefully stop. If they don't, it also gives you sort of an expectation on where the next move is going. So this is the part that a lot of people don't usually know, but I'll share with you because it often happens. And that is, it's likely to travel down further should that happen, right? At least the distance of the height of the channel, which generally takes you down to another support zone. So if we, take a line across here, in fact, it does, okay? This is kind of a bit of an outlier. This is known as an island formation. It's an island reversal. It's a price dislocation. You gap down into this 5 days and gapped out. It's very bullish, actually. And this thing went on a bull run. Okay. That's largely being driven by earnings, which is always the right answer here. So long story short, I don't know how you can't still like these oil companies for the medium to longer term. Anything over, as far as I've heard, I know for sure anything over $60 a barrel. I mean, they're absolutely printing money, but even over 40 or 45, I think they're still showing meaningful profits, you know? So yeah, I think you like it long term. My question is the very near term, and that could come by 2 legs down, you know, before it culminates if you got really unlucky. So that would be the final guidance here. I think if you get here and pass through, you can do 2 things. Right now, what you can do is you can buy a put against this, and it's probably worth the insurance, given what I just outlined, right? So even if it cost, what's the price in the equity? 34. You know, even if it cost $4, you've got 25, 30, you've got 10 to 12, you got about 12 points of price action here. So you can offset, you know, 66 or 70% of potential downside price action by just buying a put. So if it's something you want to hold on to, I would think about buying the put. It may come in real handy. And if it doesn't, you know, it created the peace of mind, and it's not going to break the bank. It's not going to kill you. I would do that. That's what I would do with TRMD if I want to hold on to it. Okay. All right. Let's see. That's where I've been lately. Let's see. Buy a collar on TRMD for cheap. Yeah, you could do that too. That's a good point, Dave. I didn't want to go to that level in this room, but because you bring it up. So what you could also do is, you know, you could sell a higher call, okay, which actually still gives you a little bit of upside should the stock continue to go higher, and sometimes even offset the cost of some further out of the money put action, but in a way give you kind of a window here where there's no real harm or foul no matter what. So I don't want to get into the super deep ins and outs of that, but that's what he's saying is you could sell a higher price call, maybe just above these swing points here, receive that income. Oops. Sorry, bud. So just above these swing points here. So let's see what that's coming in at. You could go at the money if you wanted, you know, to get more juice. I'll reserve that for the people once they've done a collar or two to start thinking about those kinds of things. Sometimes you can actually get paid to put this trade on, okay, if you really know what you're doing. But what you're doing is you're going to sell a call. When you sell a call, it generates income into the account, okay? And then you can use at least a portion of those proceeds to pay for the put option. Is what he's talking about there, and that is the perfect trade, because it does still, if you sell the call above 36.60, so I'm not sure what you're going to get for a 40 call. Yeah, that's maybe part of the issue here, but whatever it is, it will at least offset some, you know, of that put. What I'm saying is, you probably should consider the 35. And I know it's tight and it doesn't create a lot of upside in the trade, but what it's going to do is give you a lot of premium. So that if you bought the 32.5 put, you know, it might even offset the entire cost if you're super lucky. All right. So that's enough of that. More people in this room probably have no idea what I'm talking about. So we got to stay away from these kinds of things, but Dave, that is a super good contribution, because that is the best trade for this stock. Steve, lots of good information in today's session. You should come more often with Glenn on YouTube. Yeah, don't let Glenn see that. I hope Glenn's not watching. No, you know, Glenn is the perfect YouTube personality. I will say, I'm really good on the stage, okay? You want me on a stage for sure. YouTube? I don't know. Jury's out on that one. I think I'd get a lot more comfortable over time, but yeah, this is different. You need a Glenn. You need somebody who's just all over the map. Those are the best YouTube personalities for sure. You don't sing. You didn't sing once. No, I'm not going to sing. Dave says you can get the collar for 82 cents. That's a good trade. So it's not offsetting the cost. They rarely do. But that's significant. That's a good. So that's the 35 and the 32 and a half, Dave. Sell the 35 call, buy the 32 and a half for 82 cents. Out of pocket. That's nice. Very nicely done. All right, cool. So I know we're rounding home plate here. We've probably been on a little longer than we should have. If this kind of coaching is worth your time, because we do that in the room as well. So not only do we look at potential opportunities, we notice things like markets changing directions, we coach you up on good stocks to consider buying long. We coach you up on bad stocks to consider selling short. And we do this on a daily basis, right? And in just 30 days, you can figure out if this is going to be the right fit for you. The reality is it's not the right fit for everyone. This is not retirement services. This is active investing and trading. People that want to be heavily involved, not hands off. But if you are that person, if you're a person who's super active, wants to be involved, loves the chat, loves the ability to contribute, loves the ability to see what other people who have been using VectorVest for decades are suggesting as possible trading opportunities, that kind of thing. If you're interested in that and getting that kind of information on a daily basis, then you want to get into the Derby trial. Joey put the link back into the room. So you just go to vectorvest.com/thrive, and that'll get you there. I'm going to get off. Hopefully I haven't put Joey in a pickle by being on a little extra. I had a great time, but I'm going to leave this up. This is Glenn's bag. Glenn is the YouTube guy. So I'm just filling in. I hope he's having a great vacation. Glenn, if you're watching, I love you, buddy. Love you like a brother. Mean it. And we'll see all the rest of you guys next time. We'll see you soon.